Welcome back to the first trade, 10 minutes into the trading day right now. What we're learning is the big box retailers are faring pretty well during these pandemic-induced lockdowns. Today, we found out Target sales surged in the first quarter, up about 11%. Digital sales absolutely skyrocketing, better than 140%, as many people ran out to buy essentials during this time. Joining us now to talk more about this is Forrester Research Retail Analyst Sucharita Kodali. Sucharita, good to have you on the show again. Just your takeaway. I mean, now we've had Walmart and Target out with their Q1 earnings. What is your big takeaway from both?
Well, their top line sales were great. Their comp store sales for even physical stores were some of the highest they've seen in years. And of course, a huge percent of the lift was driven by e-commerce. Target actually had greater e-commerce growth than Walmart, almost twice as high, which means that they are absolutely gaining share, not just against Walmart, but Amazon as well. Now, the challenge, of course, to this is profitability. Amazon has had softer profits as a result of their higher expenses. Walmart yesterday reported really soft earnings. Actually, they reported the strong earnings. Target reported the soft earnings, which suggests that Walmart's been better at containing its costs, whereas Target has invested heavily in driving its market share through e-commerce.
Sucharita, one of the big takeaways for me, Home Depot, Lowe's, Walmart, Target, these are some eye-popping sales gains online. The businesses in many respects have held up very well, in large part because all these companies have the money to invest in their businesses. And where do you think the next shoe to drop is in retail? These retailers seem to be consolidating their market share, and there's a lot of companies out there like a JCPenney that may go away before year end.
Oh, there's no question there are going to be more retail bankruptcies this year. There will likely be more than we've ever seen. There are certainly all of the companies that are in debt that are the mall merchants. There are the private equity funded merchants. So there's no question that the whole middle ground of those that are heavily invested in physical real estate will be challenged. But yeah, I mean, there are fortunately some success stories, certainly the essential retailers like Walmart and Target. And to your point, the home improvement space has done very well this season too. And Lowe's actually reported great earnings as well. So they too have seemingly managed their expenses that this season has caused through extra sanitation and supply chain challenges.
Do you think there's a place for them all in the future of shopping after this COVID-19? And last night I briefly caught up with Target CEO Brian Cornell on a media call. I asked him, do you have interest in some of these JCPenney stores that are closing? Do you want to get on the mall? And to me, it didn't sound like he really wanted to step up and attach more targets to some of these malls, which to me is a red flag.
Well, the issue with the malls is that there are just too many of them still. There are about 1,000 of your traditional indoor shopping centers, and the real estate executives that I talk to think that there'll be at least 10 to 20% that will likely shake out in the next few years. And those are often some of the weaker malls anyway. They're the C and the D properties. The A properties will still have some resonance with customers, and they will still have demand from a merchant standpoint, but it's going to take a while even for them to recover, because this has just been a terrible time for them. And it's going to take probably at least 6 months for them to recoup their traffic, because consumers just aren't feeling safe and secure in these environments. And this is where we need to have new cleaning procedures or more government, oversight over how do you actually make people feel safe in these public spaces.
To that end, Sucharita, a company like Target, a lot of retailers now having to set aside money for just that. How do you keep the customer coming back and make them feel safe? They said that store cleanings, increased wages, and all of those costs related to the pandemic cost the company $500 million last quarter. Are you concerned about that when you hear that they're having to spend that kind of money, and how sustainable is that for them going forward?
Well, this is just going to have to be a cost of doing business for every merchant moving forward. And this is actually a place where I do think that federal and state governments can step up to help to subsidize and create better cleaning solutions in our future in public spaces, whether it's offices, malls, schools. We do need to have more than just masks and Clorox wipes that keep us safe. It has to be innovation in things like air filters and UV lights and state-of-the-art disinfectant tools like electrostatic cleaners. These are things that are absolutely essential. They need to be table stakes, and they need to be subsidized by the government as well. Otherwise, we're just not going to be able to leave our houses in any reasonable way in the future.
All right, Sucharita Kodali, Forrester Research Retail Analyst. Always good to see you. Thanks.
Thank you.
Hey investors, Zach Guzman here. Are you interested in learning more about the markets and getting the latest financial news? Well, then click right here to subscribe to our Yahoo Finance YouTube channel. Get the latest up-to-the-minute market analysis, big interviews in the world of finance, and information on how to manage your money every day wherever you are.